Well, welcome, ladies and gentlemen. This is your host, Robert Roy. I hope you're all having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the questions box, I would greatly appreciate it. Oh, thank you for that. Good participation. Let me just go ahead and open that up. Perfect. All right. So let me go ahead and flip over to our disclaimer. It basically says I am not an advisor and cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything you like here today, my suggestion is you paper trade it first. But then and only then would you take that trade if it fits your own personal risk profile and risk tolerance. Now keep something in mind. Because I am not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a day trade at any given time without prior notice. All right. Fantastic. Hey, Robert, how you doing, sir? Christina, and all of you, welcome, welcome, welcome. So let me go ahead and shut this down. And let me bring up my intraday charts, and I didn't update intraday. I was checking something a little while ago. So let me just go and do an intraday update again. It'll just take a moment. We'll let that run in the background while we're talking there. I'm not going to update any criteria, so that's fine. All right, just to get an idea of where some of the stocks are on the intraday here without having to go over to TradeStation to start checking those out. So I hope you guys had a fantastic trading week. It certainly was an interesting one. Threat of war, right, had definitely caused some issues on the S&P 500. And I'm going to flip over to the SPX right now. And guys, I have a very long-term uptrend line right now on the S&P 500, and you can see from back, the end of December and even further back, but it does have importance. But we hit it, there in December, and then again in April, and then again in May. We didn't quite get to the trend line here in July, but we went to the 55 EMA, which has been close the last 1, 2, 3, now 4 times. And I was teaching a workshop last week. We were talking about this, and on Friday we were talking about taking that bounce, because every time we get in that area, we do seem to get a move up. We would have a tight stop, and we did some bullish trades and have had some good success so far with some of those positions that we looked to trade last week, which was Friday right here, August 11th. Hey guys, just give me a 1 to make sure that you can hear me all right. Okay. I just want to send, someone said they're not hearing me, so. All right, so Avery, hopefully you got that from me. All right, so good bounce today, good strong move, right? Gap up, I should say first. We got back up above the 8-period moving average. We kind of got back into our rectangle as well, which is fine. We actually should drag that rectangle out. I haven't used this computer in a couple of days now. We'll drag that rectangle out, and until that gap took place on Thursday, we were right there. We're back in it again. The question is how much can we push further up? They're not, Robert. These are private workshops that people are bringing me in for, so they're not anything that is open and available at this point. So I will be doing some of that stuff, though, I think down the road, but for right now, we're going to keep doing what we do. I enjoy being home. I'm not going out again until sometime mid-September. So remember the retired part, Robert, right? Still semi-retired. All right. So let's let me make that box a little bigger there so I can see more of the questions as they come through. All right, fantastic. So guys, I want to go through and look at a strategy that I want to teach you guys, and we'll take some candidates. I am retired, Robert. Ask my wife. She'll tell you. right? I am definitely retired. So guys, here is a channeling stock pattern. This is on CMP, one that's actually fairly active right now. We're sitting right at support, although we did get a little pullback today, but sitting right at that support level. But this, when we look at channel, guys, I am not a fan. Let me just get rid of moving averages here. I am not a fan of taking channeling trades. I'm not a fan of taking channeling trades and exiting from support to resistance or resistance to support. In other words, I'm not a fan of getting in here and letting it come all the way down here before I get out. I am a tremendous fan of exiting at that midpoint on half of my trade. So if I go back, let me just get a better color pen than that green. So if you look at this channel in here, guys, you know, we got this moving here, right? We identify the pattern. We slow down right here, even start to go back up before we fail. Right? So maybe scaling out of half of your trade here. Okay? Then we make a move up and we fail again. Come back up, we blow right through. We come down, same thing right through. But now we come back up and we fail. Right? Are you really staying in that pattern? Yes, it broke up to here, but you're not out of any of the trade, and then you're all the way back to here. You're probably not still in that pattern at that point. Came back up, retested again. Right? Then we went up a little higher. Had a strong pullback to here, right? Came up, came into here, we stopped, and then we finally made the move down, right? Excuse me. So, guys, instead of saying, hey, let's go ahead and take this full move, top to bottom, full court press, instead of doing that, what if every time we got to the middle, right here, we exited half our trade. And then when we came back up here, we exit half our trade. By the way, the other half would have been down here, right? And then the next half up here, and exit half here, and then half here, and so forth, right? Because, guys, when this happens, you don't get your head hit to you. This is not turned into a losing trade. All right? It gives you an opportunity to still take advantage of the move. Here is Dish, D-I-S-H, right? Let's look what happens with Dish. So it came down, broke through the middle a little bit, we came back up again. So if you took that bearish trade, you didn't make it down to support, so what happened? You're not out of the trade. Came back again, you're still not out of the trade, right? Again, now you're back up at resistance again. Had you taken half the trade off here, you would have gotten stopped out of the second half somewhere over here. And that's okay. That's fine. Right? If I took half the trade off, let's say I took a trade here, right? Right, there's my entry. Actually, let me do this. Let me put E for entry, right? This X is my first exit. This 2X's is my second exit. So I exit half of the trade at each one of those. Joan, everything we put in the center of a channel, a trend, or Fibonacci lines, you are 100% right. They're all Fibbits. Every one of those are Fibbits. Right? We're going to spend some time tonight in the E-mini Think Tank going over Fibbits, what they are, how they work, how do we apply them, when do we apply them, and so forth. So then we go ahead, we take this entry right here, right? Here's our first exit. And here's our second exit, right? Then there's a bearish entry here. You take your first exit and your second exit. All of these may seem futile, but Rob, it moved through just fine. Well, it didn't here. That's for sure. You got your head handed to you on that trade right there. On this one, yep, it made its move all the way up. But guys, if I took that bearish entry off of here, and came down here and it snapped back up, you were stopped out of that trade. Right? It costs too much money. If I took the bearish entry here, you should have exited half your trade there. If not, you were stopped out of trade. If I took the bearish entry here and you did not, it moved down to support, you should have taken half of your trade. If not, you were stopped out of your trade. If you took the bearish entry here, I think you guys are starting to see a pattern, and you did not take your exit there, you were stopped out of the trade. Oh, but Rob, the next one went straight through. You're right, but I got nailed on 3 or 4 of the last times it happened. All right, way too much of a risk for me to want to take that. So I tend to take my trades off, half of my trade at the center, the other half just below resistance if it were bullish, right? So just underneath here if we were going up, and just above here if we were coming down, right? Depending, again, bullish, bearish trade. All right, so a couple of questions in there. You're right, Patty. As much as I was on the road, I deserve to be home. I appreciate that. So Bobby says, for channels, do you buy the option at the 65.85 delta or the out of the money option? Saw a table of some of your channel trade said OTM options. Not sure what you were looking at there, Bobby, that you saw a table of it, but there's not a right or wrong answer to this. It really comes down to what are your thoughts on the position. So if I have so we'll use this stock here. I have Dish, right? Let me grab a pencil again. We'll change colors yet one more time. Let's get back to that red, which is nice and bright. Okay. So, you know, Bobby, if we took this as our example, we have a move, we'll call it 60.5 to 62.5. So we'll say it's about $2, right? And then 62.5 to 64.5, once again about $2. So, you know, $2 each. If I look at the options on Dish and I find out that the options are going to cost me whatever it is, $5, but there's a 40-cent bid-ask spread. Well, if I try to start using out-of-the-money options with those larger spreads, it may not pay off. If I calculate, all right, I'm really not taking this bearish trade at 64.5. Maybe I'm taking it at 64. This is where I enter the trade. Maybe I'm getting out at 63. So really I only have $1 of movement in there, and if I've got a large spread and a very small delta, an out-of-the-money option, then I don't have the room to take advantage of that, right? If we have, and I'm guessing, guys, I don't remember, but MDY is usually a bigger spread. So you have an MDY, right, inside of there, and you've got a spread from 306 to 312, you know, so $6, 12 to 19, you know, $6 or $7. You've got a decent amount in there of movement. You may have better luck with this position to take this trade based on an out-of-the-money option, not having to spend the monies on an in-the-money option. So, Bobby, does that make sense? Does that is that kind of clear it up a little bit as to why the broad statement of do you trade in or out of the money, it doesn't necessarily work. So with that being said, for me, I would generally go for the in-the-money option anyway. I'm looking for the 65-ish, as close as I can get to it. That is my preference of what I would prefer, you know, or like to do on this position, or any one of these as channels. All right. So hopefully that makes sense for you guys. So guys, you've got stocks like Dow, DOW, right? Channel in there. And guys, these are just 14 of them, and I'm going to go back to template number 2. Okay, I'm going to do this a sec. Let me move this over. Actually, let me do that. Okay, so give me a second, guys, to fix this. I just need to make an adjustment. My trade nav is fighting with me today for some reason. Okay, let's put it back in view. It is, Bobby. It's being recorded. Hopefully you guys registered with correct email addresses, and then I'll send you the private link to the recording when we're done, once it's posted. So guys, I want you to take note of this yellow bar that I just added to the chart, okay? CMP is this first one there. That yellow bar, if I put my mouse over it, let me just grab a crosshair. It's a lot easier for me that way. That is August 1st, you will notice, right? I thought I put the right date in there. Give me a second to change it. Let's go back and put it to August 3rd, not August 1st. All right, just a couple of steps I've got to go through here for some custom highlight bars that I have developed. But the reason I'm looking for August 3rd, guys, that was the last time I taught a Monster Market Movers, was August 3rd. So I want you guys to see what has happened since we did that event. Now, August 3rd, we're looking at today is August 14th. My goodness gracious, what are we looking at? 5, 6. Today would be 7 trading days later is where we're at. Okay, let's switch back. Got it. Okay, so there we go. So guys, that bar right there is the day that I showed these in our last Monster Market Movers. You can see the move that we made here: 68 down to 66, then down to 63. We're talking about, you know, in trading days, 1, 2, 3, 4, 5, 6 trading days we made that move. It's 8 trading days till today. But we made this move in 6, right? In 6 days. Now this was great. You could have taken it all the way down without problem. I do like, again, that scaling out in the center no matter what. When we look at Dish, Dish did the same thing, guys. Look, now Dish happened to have earnings come out, right? We already knew what the earnings were. There was the announcement. They had gapped down, ran straight through in one day, right? And has broken out of its channel. Now, right? Nice move down to the midpoint, but guys, look at the bounce. See, if you scaled out of half of your trade there, and the entry was actually here, right? If you scaled out of half of your trade, you would have taken some profit. Even if this goes against you, no harm, no foul. You'll make a little bit. It'll cost you a little bit. You'll break even. Guys, look at here. We pushed up higher. I love that we gapped down. We came back and kissed it goodbye at 61 bucks, dropped to 59. Drop to 57.5 is our next goal. But even if we don't, we took some profit in on half the trade. We get stopped out of the trade. We're still going to make a little bit of money on it. EXR, same bounce, guys. So had you not, and this is all what's happening right now on candidates that just have come out recently. IJH, look at this, 175. Right, there's the day of our event. We pushed up here to that 175 and we failed. You take that trade down to about 172, you're out of half of the trades. You got $2.50 move or so, $2 on your option, and maybe you get stopped out today or tomorrow on the other half. But you still would make money on it even if you were stopped out. IWM as in Mary. Right, same pattern. IWN. Right, look at the move. Came back up, kissed, scale out of half. Oh, we almost got there, but we got back up. You should have been out of half of that trade. Right, and at this point, you may already be out of the other half of the, depending on the stop was. These are 14 candidates that came off of my list of channeling positions, and you'll notice these are not $5, $10, $15 stocks. These are $40, $50, $200, $300 positions that we look to trade. Same exact pattern on KRE. MAC, MAC, guys, this was my favorite one. Not a huge move, 56.5 to 58.5 to 60.25. Right? Look what happened. Here's our entry. We move and scale out of half, scale out of half. We take the bearish trade, half, the other half yesterday, right? And could be back in that bullish trade again today. MDY, great pattern, same thing, good bounce. We looked at that one before. $300 channeling stock. SPG, right? SPG had moved up, so we're not taking that trade. And even if you did, guys, it's one that went again out of 14 that went in your, of the 13 of the 14 that went in your direction. Here is STI. We had the gap up. We came back down. We take the bearish trade. We scaled out of half yesterday. We're stopped out of the other half today. And then VNQ, same scenario. Half the trade, stopped out of the other half today. Guys, on these positions, on these charts, on these setups, that Fibit that's in the middle is a tremendous benefit value to a trader once they learn to identify what it is, how it works, and how to take advantage of the strategy. All right, but guys, monster market movers, that's it. The first one coming up that everybody's going to have access to, because I've been doing this just for a select group of people. Everyone's going to have access to it for August 31st. So it's back. Guys, we did four and a half years of monster market movers. I've been teaching it now for about 5 months again. And we've had very good results every single month, just like these in here. All right, so let's go ahead and you guys give me some symbols that you want me to look at. I know some of you may have dropped some in before. I remember an American Express, that was Nick, I think. And just shut down the symbol grid. So Nick, I've got a Fibonacci drawn on American Express. Now 8 and 21 are my primary moving averages, right? We've pierced through once before on the 8, on the 8 and 21 one day and came right back up again. This time we pierced through the 21, it was 2 days, and we came back up again. So still short term. So I'm okay with it. But right now, I'd be a little cautious of taking an entry because of that 85.88. And not even just the 85.88, I would be looking at these tops in there. And you could stretch it to the upper one if you wanted to, although I'm not as concerned with that one because we have 2 solid hits off of this price point, right? So I would want to see us get above that 85.88, come back and close above, come back and test the 85.88, close near it, and then take a bounce. So Joan, we'll take a look at that. Let me delete this box off of there because I really have no need to keep it on my chart. Just clouds things up. So Joan said Google was in a channel support. Well, it was in support and resistance. It hit 3 times. I think they're in a big channel. What do you think? So they're in what I call a Fibonacci channel, Joan. Right now, Google has a couple of things going on. There's a slight uptrend happening, although it was violated on Thursday of last week. Right, when we look at the pattern of the where, let me get back to an arrow there. So if you look here, we've got some fluctuation inside of there. This gets very choppy in here, right? And then we get back, if we go further back, we have this same move inside of here. So Joan, if we look at that 932 up to 997, 932 to 997, I absolutely agree that there is an overall pattern in there. We do break through the support a little bit like we did here, but we're getting, it's tough to make a call. We started on the gap up higher, we dropped down lower, we went up higher. On tops, we're all the way up here at 966. We went up a little bit higher. So we've got, it's not as clean of a channel, but it definitely has that that channel momentum to it. And I like these patterns a lot. And you get me a channel that has a $60 move, or yeah, about $60 move, I'll take it all day long. Let's see. Aetna was Andrea. Oh yeah, Christina, they wound up on my list this week. We'll definitely take a look at them. Okay, so older Fibonacci on Aetna. I'm going to drag this fib back. I'm going to have to drag it back even further, but I'm going to drag the Fibonacci back and out of the way. We're going to start at these bottoms, whichever the lower low is, Guys, that stretch up via the wick, and I pull this out and I see that we did make a move back to the 236, then I know that we were in the right place there, right? So, excuse me. We look what's happening there. Let's see. This is Aetna. So right now, same scenario. Who would ask me on Aetna? Andrea. So same thing. Right now, we're sitting just below the moving averages. I'm not vehemently opposed to the moving average setup that's in here because the 8 is slightly lower than the green, which is the 21. 8 is slightly lower than 21. Preferably, it's the other way around. I am not overly opposed to it, and that's because I don't want to do anything with this until it gets above the 155. Now, guys, the thing that you will learn about me is my style of trading. Personally, I am not aggressive. Okay, I do not consider myself an aggressive trader. Okay, I'm not an aggressive trader at all, and I would prefer to wait for this to get above the 155 than trying to jump in a little bit ahead of the game. And that's my choice, or my style, I should say. I want to put more safety in my trades than I do want to worry about, again, that aggressiveness that takes place out there. So when I tell you getting above the 155, guys, when we get back into it, we will shortly start, doing again the market insights that I do on stocks, on equities, on my top 20 trading candidates. When we start getting back into that, these types of trades, this setup, you may have days that it just explodes and takes off and we miss the trade, and people would say, but Rob, you missed that trade. What they were missing was we were making $1 million a year on an account of under $200,000. So yes, we didn't take all the trades. We just took all the high probability ones, right? And we only took the ones that I called. So if something happened between one event and the next, one update and the next, and it shifted and it was different entry possibility, the answer is no, we don't take those. We don't count those, right? I only take the high probability setups. Give me above the 155 bounce. We're looking at 159.5 and 161.25 on my two upside targets. If you get above the 155 and it drops back below, I would use the moving averages as my stop, somewhere below them, if they remain below the 155. Once they get above, I'd go back to using the 155. All right, so hopefully, Andrea, that helps. Tesla. Excuse me. Tesla. All right, so guys, we were setting up last week for a potential Fibonacci 4-step. It never happened. We did not close above the 764. We may be getting set up for it again now, but I'm looking for that Fib 4-step setup to take place, get above the 367, not above the 377 on a close, come back down below the 367 and take the bearish trade down to $355. So that's the only setup I'd be looking at right now for them with where they sit. If they keep inside of this channel, guys, they come back down. You may want to take an intraday type trade back down to 355, but a little more caution on that setup. All right, Mike, hopefully that's helpful. Gilead. That was Helen. Oh, wow. So when it comes to Fibonacci, guys, if we drew our fib right here, very, very, very strong point of contention drawn off of, look where we're sitting right now. And then if we went back in and add the A to B to C, it automatically gives us our D. We didn't quite make it up to our D area, to our 100% move, right, on that overall pattern. But that confluence between 76.87 and 77.24, that is a very strong resistance area in there right now, right, for us to contend with, is pushing back up to one of those two levels. So right now, excuse me, So I'm going to take that off just to clear the screen, make it a little bit easier to see. Okay, so right now, where are we? Well, I'm not a fan of the moving average setup at all. I need, and I mean that by where we are in relation to the moving averages. Yes, the pink is the top line, but I need the stock to get back above that pink line. My only issue is by the time it gets back above the pink line, it's already going to be halfway through the channel. So I'm not a fan of trying to jump in at this point until we can get some bullishness on the position. I don't have a bearish setup on Gilead at this point, Helen, so I'd be a little more cautious with trying to take bearish. I'd have to get below the 55 before bearish trades, and my 8 would have to be below the 21 for sure, at a bare minimum. All right, so hopefully that is helpful. You are welcome, Helen. Let's see. That is Gilead, that one there. Okay, so the next one is Google. Let's see. That one came up with a different comment. Robert had brought it up and said it could be a reverse head and shoulders. Tough C. Let's see. It could be the shoulder, the head, possibly, Robert. It could be a reverse head and shoulders. It is such a wicked pattern, though, Robert. We'd be following even higher than this trend line for the break of the neckline because you're going to connect the last 2 times it did break to the upside. So a little bit tougher to try to find something viable to trade, but you are right. It could be setting up for a reverse head and shoulders. I think a lot of emphasis right now is on where Google is setting and resting right now. There's a diagonal trend line. There's an 8-period EMA. If we don't break above there, it looks like we'll be pushing back to the downside. Yep, okay, good. So Robert said he was looking at the same points. Okay, excellent. Excellent. Christina put in Mickey D's. They showed up on one of my lists over the weekend for potential trade setup. Didn't quite get the legs I would have liked it to have gotten today. Right, it's down as of, I don't have time on there, but we checked at about 5 after 12, so maybe about 1:45, 11:45-ish is where that last update would have been. Okay, so it's had a bit of a pullback. I'm not, let's take this off. This line was for something else. We actually removed the fib from there, so let's see. Okay, so I need to go further. Back. All right, so guys, what happens here? We had this move up, sideways move up, all sideways move up. That's a hiccup in there after the gap. That is definitely acceptable. Good strong move up, and then we start trending. So we're going to take this from this low up to that high. And I'll pull the Fibonacci out, okay? So first question I have on McDonald's is, do I need a fib it? Something tells me more than likely I do. We'll call it $2. 45.54, yeah, we need a fib it. So we're going to need both the 118 and the negative 136 to be added in there. Once again, guys, we'll go over this tonight at the Market Insights. I mean the E-mini Think Tank. Okay. And go figure. What happens with McDonald's is it pushes up right to that midpoint, comes back. It pushed up there on Friday, and it comes back, right? So I do like the pattern of McDonald's. I am looking for it personally, Christine, in my analysis was to close near the 8-period moving average, which was 156, bounce and take the entry there. but you've got that 158 3/4 as a potential exit. So you just got to be careful. There's not a lot of room before you hit your first ceiling in there. I looked at this for an advanced spread setup that I was looking to do with this. So I did not take the trade today because the pattern has not given me what I wanted. Again, preferably I'd rather close near the 8, which is the pink line that's in there. All right, so Christina, hopefully that helps. All right, so BXD, Bobby says. Holy mackerel. Okay. So, you know, Bobby, yes, if you were asking, can we draw the Fibonacci on here? Absolutely we can. Hold on a second. What happened there? I see the word S. 1 for 5. Oh, goodness gracious. Okay. I didn't look at price. Yeah, I didn't look at price. Not only is it a split, Robert, it was a 60-cent stock, and they did a reverse split of 5 for 1 split. So, guys, let's talk about stock splits. Stocks tend to move back to their pre-split price. All right, so what does that mean? If you had a stock that was 100 and it splits down to 50, you had 100 shares originally. At 100, now you have 200 shares at 50. It has a tendency to move back to the pre-split price, which means back up to 100. Well, when you do a reverse split, the stock has a tendency to move down back to its pre-split price. So now you have 1 share at $2.40. You had 5 shares at whatever it was, 60 cents, 58 cents, whatever that price was, right? So where you had 5 shares, you now only have 1. Now you're looking at some point in the future, the stock potentially moving back to the 60 cents again and having only 1 share. So I'm not a fan of these types of positions. They're also, because of the low cost and the penny stock mantra behind it, or baggage behind it, I would probably run the opposite direction for it. I don't personally trade these. Oh, I got the wrong symbol in there. Okay. I put BDX. Well, I don't know what happened. Well, that was a good example. Anyway, so BDX instead of BXD, or E, whoever that was. So I love the pattern here, guys. I love the bounce. You can see this bounce we took off the 618, strong, right? Back to the 50, strong bounce here. It needs to pull back. I love the moving average cross, but I need to close near the moving average, take a bounce for me to get a bullish entry on this trade. It's too far away from support right now. Great confluence, by the way, right now at the 199. So we've got the 8 and 21 crossing. That's my first step. My second piece of the strength is the 199.23, the 382 fib line. My third piece of importance there is this $200 price point line. And we're going to change it to 200 right now. Right? I tend to go more to the reds for it. I'll use that dash dot. And that's my $200 price point. Right? So a lot of stuff happening right here in this one area, this area of confluence. Right? So I really need to see a pullback to the moving average, and then a bounce, and then a potential entry into that position. Robert said, perfect segue for an educational moment, Rob, with BXE. I know you planned it that way. Of course I did, Robert. Of course I did. Absolutely. Let's see. Would I mind re-showing Tesla and my theory? Sure, Leeds. So what I was talking about is the stock is up near this 764. I am looking for a fib trade setup that I have developed called the Fibonacci 4-step. my theory is it has probably somewhere in the 85 plus percentile chance of working if the setup is done properly, right? And it's the first test or the first time we get that setup. So my mentality, my mindset says I've seen it thousands of times before, leads, so I'm not ready to take any kind of trade right now. And even if you forget about my Fib 4-step trade, I would not take a bullish trade here until I get a pullback to a moving average. It's too late. Friday maybe, but not today. It's already had this big move. My stop, and leads, maybe this will help a little bit, but my stop has to be down here somewhere. That means I'm letting my stock run from 367 to 352 maybe, I don't know, before I get out. Well, I'd rather get in here. Instead, I'd rather that be my entry, and this is my stop, is right there. Right? That's my reasoning for it. So leads, hopefully that that makes sense. But the reason for the trade is it's one that I've developed that I've tested thousands of times, taken hundreds of times, which tends to work very, very powerfully. It's one that we'll go over heavily into the market insights when that becomes released. Patty said, on Google, could you look to enter a bearish trade if it moves lower than off of the 8? Let's see, Patty. Yes, so Patty, that's just it. Right now, moving averages are in perfect alignment already, right? We've got an overall bullish uptrend, and we stopped right at the diagonal of the uptrend, which has a confluence of the 8. We have this doji-like pattern right now. I'll do another intraday update. We have this doji-like pattern right now setting up at that diagonal trend line. So this should give us an update till about 20 after or so, 20 afternoon. And if we get the rollover, Patty, yes, then that 932 and 913 are your two downside targets for sure. Right, if we were mind readers. Yeah, so lead said, so it will go down today, right, if we were mind readers. Computer's working very slow, guys. It's the GoToWebinar platform, which is just the easiest one to work with, but they're all the same thing. They all just take such tremendous resources from the computer. Let's see, who's next? I really just want to see where Google is. Hey, Jeff, good to see you, bud. Glad you made it. Let's go ahead and let me resize this one on TradeStation. I'll leave that for now. Let's go back here. All right, so here's the daily on Google. All right, you can see we've got that same pattern, right? This is our daily chart. We're sitting right there. So it really looks like not a whole lot has happened. 937.98. We'll call it 938. So we're a little bit lower than that right now. But, you know, if we get that close lower tonight and we start moving down tomorrow, there's bearish. But I would be careful that 932 is the first exit. And then 913.5 is next. Let's see. Did I miss anything? AMT, applied material. All right, so guys, this was the one. I showed this one last week. Excuse me, guys. And that's what happens when you keep 3 days, right? I showed this one last week in Power Hour. These lines were the I think they were Mondays we put them as, right? Let's see. August 7th, yeah, those were Mondays, right? So if we look, there's our next Monday right there, All right, guys, we've taken this trade 1, 2, 3, 4, 5, 6, 7, 8, 9. This will now be the 9th week of taking this same trade, having it on a diagonal spread, and taking it over and over again. So hopefully, hopefully it did. A lot of you took advantage last week and enrolled in Covered Call Explorer, which is great. And guys, I didn't say it last week, but Covered Call Explorer comes with a 1-week trial. So you're really not doing anything but getting in there to see if what I do is something that fits your personality or not, right? So go ahead over to the members page and take advantage of that. But Robert, I love the pattern, and I'm trading it diagonal. If we can stay close where we are, Robert, is probably my most exciting bit of news, because that puts us at a high recently. And if we go back historically, you'll see we've never been this height before. So we've done extremely well as a move. Christina says, what call would I sell? Yeah, I'm not going to talk about what I'm selling on it, Christina, because that's part of what we do in the Covered Call Explorer. But I would be selling an out-of-the-money call front week on the position is what I do. All right? So every week we sell, it's somewhere between 25, maybe 50 cents, 80 cents on AMT. You're welcome, Christina. Let's see. Robert saying dry ships. I don't even know if they're worth it or not. It's channeling, sort of, kind of, almost, maybe a little bit, but $3 stock. I don't even know what's available. Are options even available on these guys anymore? I do not know why it's looking very funky. And all of my stuff has disappeared for entering the symbol in. Don't know. For some reason, it's not liking me now. So, did I not do dry ships? DRYS? DRYS? No, okay. Yeah, so I just couldn't get it into the option chain. Let me see if I can open it up again, if that will do it. Let's try to open the option chain up again and see if that helps a little bit. Bobby, when you're saying, and I don't know, this was a few minutes ago, so I don't know where we were at when you were asking the question, so I'll ask you a question to help me understand it. When you say, how do you decide what the call strike price to sell, I think you're referring to, oh, no options on dry ships. I get you, Robert. What strike price to sell? Delta is a very big part of it. But a lot of it comes down to, Bobby, my experience of looking at that option chain and determining what I think we're looking to see it move. And that's a lot of what Covered Call Explorer is. It's not just a hard and fast rule on strike prices. And of course, I give you all of those, right? I give you every one of the strikes and everything we're going to trade. I give it all to you. Let me see. In Covered Call Explorer, let me just see something here. Let me try to see if I can open this up. All right, so let me just do it that way. So this was as of last week, right? This is what I showed exactly last week. You see, for the last week's one, we had the 139 strike that we were selling in there, right? And the premium is not. It's actually, it's not the right numbers there. I don't have the strikes. I only have the first one we did there. But I took in 48 cents on the premium there. This is just totals. That's all. I just needed that in there as a calculator. So we were up 31%. So we would add another weeks in here. But Bobby, it is based on the delta. It is based on how much theta, time burn, I'm going to get my hands on, determines what week or month I'm going to do this for. And more importantly is how quick the payback is. So guys, I took one of the trades off of, I actually did 3 of them, but one of them today that I took personally off of the list. I weigh these. I weigh them out. And I give you my ranking on it based on a couple of different criteria. Right, so if I bring in an older sheet, so this is diagonals from a while back. This is from June 12th, right? So you can see I've got some things color-coded in there, right? And we make determinations based on that. I actually even did this week. I didn't do it for the group because I'm testing it. I've done it 3 weeks now. I've actually graded them and given them a number grade to determine which one is the one I like the most based on some of this criteria. Right? So you can see I'd spend $6.44 on AAL. That's my cost basis. 6.67 weeks. 6.67% rate of return with the 3.13% break even, 3.13 weeks till break even, right? And if I were exercised the first week, I'm underwater by $1.44, right? So when I look at the numbers, I'm able to make a quick determination: do I like this one a lot or not? And it's not just based off I've got a 12.38% rate of return on MDT. It's based on other factors in there as well. Yeah, Rob O'Roy. Robert says ROR equals Rob O'Roy. So Robert, I need to find the picture somewhere, but when I was dating my wife, I played football, and it was street football, but we played, when I say street football, it was my block had its own team, another block had their own team, and we would play either in a park, if we can get in the park and there wasn't someone already on the field with permits, because it was a neighborhood league. It really wasn't a league. It was just, hey, do you want to play my team on Sunday? We either played in the park or we played in the cemetery. And yes, I did say that, cemetery. But anyway, on the back of my football jersey, Robert, I was always on the line. I'm a big enough guy that I was always on a line. And my jersey said Rob and then -O. Because I was number one in our, again, we had stats even in our league, but I was number one at turnovers, at having people fumble the ball. So it was Rob, oh, after I smashed the guy, took off his head and knocked the ball out of his hand. So Rob O. Roy, I like it. Robert was saying that he pointed out dry ships before, not because of trading it, but because of the reverse split that they had done. So they did a 1 for 7. Yeah, Robert, I have not looked at this puppy in forever. Rob the Hitman. Yeah. Let's see. Big airplane. All right, I like it. I like it a lot, Andrea, where it is. Give me the bounce, 240.5, 246.5 are my 2 upside targets. My stop is somewhere down below that 234 half level, the red line, the 0.236 is where my stop is going to be there. Let's see. Guys, let's take a quick look at Mondays. For me, I don't get to do a lot of trades because I am managing a lot of my positions from last week. I do a large amount of covered calls, naked puts, diagonal spreads. My entire portfolio for my retirement account is built from this, right? 100% of it. I don't own, and actually I don't even do a lot of the covered call components. I do much more of the diagonals and the naked puts, but every once in a while you get put the stock. I have one right now that I bought the stock. I'm underwater slightly on the stock, but I've written covered calls a little bit on it, so we've dramatically reduced how much I'm underwater, and underwater is less than $1.25 or something, so it's not like it's expensive. But from there, we've reduced it with renting out for the last couple of weeks the the option against it and did the diagonals. So I don't get to do a lot of futures trades on Monday morning, and even tougher now when I am preparing for this class today. So guys, I was watching what took place this morning, and this is the Dow. This dotted line right here is where the market opened at 6 p.m. last night. I did not look at the market at all last evening, but I did notice this morning we had that double top and that fail, and that was right around the European market time, right about 4 a.m. We had that fail, and then we pushed up following that same horizontal blue line. We got close here, we nailed it here, we broke above and back below it here. Okay, so now I'm very interested in that line. We get a close above, wonderful. That was at 925. Can I push higher? All right, the next candle, we fail on our 930 candle. We push higher on the next candle. All right, we close right here. Very wild, lots of wick as we're getting started. I wait until the next candle, we pull back, that red arrow, we take the bullish trade there, right? Take the bounce off of that horizontal line that's in there, right? Take the bounce off of there. And we start making a move up. We come up, we get a little bit of a pullback, 8 or 9 points pullback, not a big deal, certainly less than my stop was. I'm watching, waiting for 2 closes below the 8. I got my first one to close below the 8, which is the pink line. My second one closed below the 8, pink line. We're out of this, right? Right there, right at close, we're out of that trade. Climbed higher, came back down, don't care, right? We're out of this position at that point. And the entry on it came right, I actually got in 2 ticks above my support line. I just don't remember what it was. I just know I had it set 2 above. So that price was 54, so we're in at 956 is the entry, right? And we're talking about closing price on this candle is the exit. So the close is 969. So 56 to 69, we're looking at 13 ticks. It's on the Dow, so 13 tick move. No, it's not bad. $65 on one contract. I had 10, so $650. Of course, it's all non-funded. But I had 10 contracts on it. If you only had one, you needed $500-ish to net $65 in your account before commissions. Right? So it was a great little setup on the Dow this morning. Very, very, very big fan of the YM. I taught this extensively over the weekend to some of the traders as well, guys. So when we look at Forex Factory today, 9:30 tonight, for those of you that are in the E-mini think tank, we will be looking at monetary policy on the Aussie. We will be looking to trade the Australian tonight around that time period. You guys, if you remember last week, I taught you a methodology for getting in when you don't know where it's going, right? So we're going to jump on that again tonight. But when we look out over the, tomorrow, guys, there's not a whole lot during the day tomorrow that has any real importance to them. Italian bank holiday, French bank holiday. Okay, I don't trade either of those markets anyway, right? Moderate level or impact position. Let's see. British pound has a high one at 4:30 a.m. Retail sales come in at 8:30 tomorrow. Nothing great tomorrow night. But guys, you can go out and check some of these positions and see what's going on with them, right? And check them out at Forex Factory. So guys, monster market movers, right? It is coming up. If you look at the calendar, it is coming up on the calendar. And guys, to get in here, all you need to do if you're not logged in or don't have an account, it's a free account. Just come to the the login area or members area, and it'll give you a place to register for free, and then you'll see all this calendar. If you click on the Monster Market Movers link, he may not have it active yet. Oh, nope, it's not. So I know he sent me a link. You'll get an email from me today. So guys, here's the thing. If you can All right, hopefully you guys are hearing me again. Let's see, you guys okay to, you hear me? All right? Okay, beautiful. Okay, yep, gotta love this thing. So if you guys came in through me, if you're my students, you'll get an email directly from me today from Wealth Builders HQ. And guys, I've got a special discount for the Monster Market Movers workshop. If you came in through Lisa or any one of the other partners that I work with, guys, that bring people in here, you're going to get an email from them today, and that email will give you that same special, that same discount that we're offering here, guys. So it's Monster Market Movers, guys, is a powerful workshop. If you look just on, let's see, do I have it here? And again, I don't even know what we've got. So it's not a link that is structured yet. So guys, in the back office component of it, just with what, let's see. Guys, there's the bonus materials for Monster Market Movers. It's over 4 hours. That's just the video component. That's not the manuals. The manuals are inside of there as well. You'll see WBHQ MMM manuals. Here they are. Here's all the manuals, right? Welcome, using Monster Market Movers, economic events, reviewing the market, option selection, trading with fibs, trading with pivots, technicals, pattern of the month, which is extremely powerful, trading line and candle patterns, the trading watch list and the addendum watch lists, jump starting your process, right? Cover slide is just the slide that I used, right? That's all that is. But guys, there's over 4 hours of videos in these, total in these videos here, right? And 100+ pages of manual, plus the 2-hour live workshop, plus another manual of candidates, plus another video of Fibonacci's that is happening that day, you know, of the workshop, plus the addendum manual, which comes out and gets created right before I start the workshop. So there's a tremendous amount of material for that workshop. You guys will get access to all of this, right? My web guy and I have a conversation as soon as we are done here. So make sure all of this stuff is ready to go. But if you guys wait till this afternoon, you'll see an email from us. You'll get an email from Lisa and, again, our other partners, and you'll be able to register for that workshop, guys, for this class, right? And you will get the email from me for the login for it, right? It's all going to be held on mine this week. All right? Yeah, you just give Robert, just give Mel a call, and she'll help you, all right? So awesome. Well, ladies and gentlemen, it looks like we're about that time. I missed the mark by a couple of minutes. We're a little bit over that 1 hour time period. So, ladies and gentlemen, have yourself an awesome day. God bless. Remember, go into the members area. You'll see all the various tools we have. You can go into the tools area. Actually, I think that's where he told me the, let me see. That's probably where we are. Let's see, on online workshops. That's probably where we are. Nope, he doesn't have it up there yet. This one, guys, you can get last month's in there, but we don't have the one up there yet for this month. So, for some reason. All right, I will check and see where we're at with that. Ladies and gentlemen, have an awesome day. You should be able to register for next week's Power Hour. Just make sure when you get the email it says for next week. He should have that all changed over now. If not, just go ahead and give it another couple hours and get registered then. But you all have a wonderful day. God bless. And I will see you all, hopefully tonight in E-mini Think Tank. Certainly hope to see you guys in Cheapskate Trading, in Cover Call Explorer, rather. And certainly in the Monster Market Movers coming up on the 31st. All right, folks, take care now. Have a great day. Bye.